Now, friends, we're going to look at another segment of what we are doing right now. Say that the trading account is concerned with the finished goods. If in the foregoing example there had been $3,500 stock of finished goods on 1st of January 2007 and 4,400 on December 31, 2007, and the sales of finished goods amounted to $25,000, then the trading account would appear as, I repeat, if the trading account is considered with finished goods. You can write this down. If in the foregoing example there had been $3,500 stock of finished goods on the 1st of January 2007 and $4,400 on December 31, 2007, and the sales of finished goods amounted to $25,000, then the trading account would appear as follows. The first thing you write the person's name, T. Hawkins. You have trading account for the year ended December 31, 2007. Now we're given a scenario that the sales figure is 25,000 when the list cost of goods sold. Alright. Stock of raw materials in this case is 3,500 as suggested. Now we're going to add our production costs of goods completed from the manufacturing account. So you see where this goes, friends? Up here you write CD, and down here you write BD, because you have brought it down to the what? The trading account for the year ended. Then you add both of them, you get a figure. It is called 21,820. This stock of finished goods will be called opening stock. Then we're going to list the stock of finished goods as at December 31, 2007, which is 4,400 as suggested in the scenario. Then you get 17,420. Because this 17,420 would be considered as cost of goods sold. And the list is 17,420 from 25,000, which will give us $7,580. So this will be called gross profit carried down. So this is how a trading account is drawn up after you have drawn up the manufacturing account. Now, friends, we're going to look at a full set of final accounts. The trial balance that follows has been extracted from the books of R. James, toy manufacturer, as on the 31st December 2008. The manufacturing, trading and profit and loss accounts and the balance sheet are then drawn up from the trial balance details. Yes. Notes for the question here. Notes at December 31, 2008. Stock of raw materials is $2,400. Stock of finished goods is $4,000. Work in progress is $1,500. This is for December 31, 2008. Lighting and rent and insurance are to be apportioned. Factory overheads 5.6, administration 1.6. For that. Number 3, depreciation and productive and accounting machinery at 10% per annum on costs. So those are notes that we should take into consideration while we are doing this question. Now we will go to our trial balance. Alright, now R. James trial balance as on December 31, 2008. To cover materials, please pause the video, write on this information as we go along. Pause the video each time we reach a new point, write on the information as you go along, please. Let's write it down. Share balance as on December 31, 2008. Stock of raw materials, versus the first 2008 to 2,100 stock of finished goods. First 2008, 890. Work in progress 1,250 for the 1st of the 1st 2008. Pay, direct pay, factory indirect, different, so they are subdivided, but one total is 33,200. Carriage inwards and raw materials 350. Purchase of raw materials 37,000. Productive machinery cost 28,000. Depreciation 23,000. Cost 2,000, 1,200. As it has been depreciated. General factory expense 3,100. Lighting 750. Factory power 1,370. Administrative staff pay 4,400. Sales force pay 3,000. Commissions for sale on sales 1,150. Rent 1,200. Insurance 420. General administration expenses 1,240. Bank charges 230. Discount allowed 480. Carriage outwards 590. Sales 100,000. Debtors and creditors 14,230 and 12,500 respectively. 5,680 for bank, 1,50 for cash. Drawings 2,000. Capital 29,690. That's how we do it, friends. Pause the video as we go along. Alright, on the function as we pause the video as we go along, please. Now, what we're going to do, friends, is we're going to identify what will go into the manufacturing account and what will go into the TP&L account and what will go into the balance sheet only. So as we go along, we're going to identify those things, friends. We're going to use M for manufacturing, T for TP&L, and B for balance sheet. And if there is both, we're going to add M and T, or so on. Alright, let's go then, brothers and sisters. Let's go. This is one area where we all struggle at some point in time. So now, stock of raw materials. Stock of raw materials going to manufacturing account only. Stock of finished goods will go into the trading performance account and the balance sheet. And B, so T and B, that is. Work in progress will go into the manufacturing account, that one, which is the opening one, and then the closing one. These things will go into the manufacturing account. Manufacturing account, yes. Manufacturing account. This is M. Look where that's otherwise still. Manufacturing account. It. These will be divided on the manufacturing account and the manufacturing account and the this is M. Just slight change here, M and T. This one is M. Yeah. This one is T. Sales forces pay. That one would be T. Commission on sales, that one would be T as well. Rent, that one would be M and T. Yes. General administration expenses, that would be right. That would be, I guess, that would be I think that would be insurance. M&T, friends. M and T, yeah. General administration expenses will go into T. Bank charges, friends, will go into. What I think bank charges will go into what? Can anybody help me here? Where bank charges go? Hmm? Friends? Hmm? T. Yes, friends. Discount allowed will go into T as well, friends. Carriage outwards will go into what? Tell me now, friends. Anybody knows? T. Just say M and T here. So you're gonna call it M and T, right? So that is that for that, friends, and this one is T. This one is what? B. B and B and B, which is balance sheet. And this is B as a balance sheet. So that's how we look, friends, for the first part, friends.